Welcome back to EMSR AG Asian Guy. Stop everything you're doing right now. Put down your coffee. Close the other tabs. Tell whoever is in the room with you to be quiet for the next hour. Because what happened today is something you're going to tell your grandchildren about. What happened today is the kind of moment that gets written about in history books. What happened today changes everything. Silver just broke $100 per ounce. I need you to let that sink in. $100. The number that they told you was impossible. The number that every mainstream analyst said was a fantasy. The number that JP Morgan and the bullion banks have been fighting for decades to prevent. That number is now on your screen. It is real. It is here. And it happened while you were watching. But that is not even the biggest story of the day. Because while silver was smashing through the century mark, while gold was pushing to within $12 of 5,000, something else happened that the mainstream media is desperately trying to bury. President Donald Trump filed a $5 billion lawsuit against JP Morgan Chase. $5 billion against the largest bank in the United States. Against the institution that has been accused of manipulating the silver market for over a decade. This is not a coincidence. This is a rupture. Those are not my words. Those are the words of Canada's Prime Minister, Mark Carney, speaking at the World Economic Forum in Davos just days ago. He said, "We are in the midst of a rupture, not a transition." He said great powers have begun using economic integration as weapons, tariffs as leverage, financial infrastructure as coercion, supply chains as vulnerabilities to be exploited. He was talking about the New World Order. He was talking about the end of the system that has governed global finance since World War II. And he was right, because what we are witnessing this week is not a normal market move. It is not a rally. It is not a squeeze. It is the visible cracking of the foundation upon which the entire Western financial system was built. Let me give you the numbers, because the numbers tell the story better than any words can. Silver spot price hit $100.49 per ounce today. That is a 4.5% gain in a single session. That is a 13.7% gain for the week. That is the 9th consecutive weekly gain. 9 weeks in a row of green, 9 weeks in a row of higher highs and higher lows. The last time silver had a weekly surge this powerful was August 2020 in the depths of the pandemic chaos. But here's the number that really matters. Silver has now risen more than 200% in the past year. 200%. If you bought silver 1 year ago, you have tripled your money. If you bought silver 2 years ago, you have quadrupled your money. If you listen to the voices telling you that precious metals were dead, that crypto was the future, that the dollar was safe, you missed the greatest wealth transfer of your lifetime. And it is not over. It is barely beginning. Let me show you why I say that. While New York was celebrating the $100 print, while traders were popping champagne and taking screenshots, the Shanghai Gold Exchange was quietly posting its own silver benchmark. And that number was not $100. It was $111.50. $111.50 in Shanghai. $100 in New York. That is an $11 premium. That is more than 11%. The largest physical silver market in the world is paying $11 more per ounce than the paper markets in the West. And this is not an anomaly. This is the 7th new all-time high in Shanghai in just the past 2 weeks. The premium has been persistent. It has been growing. It is the market screaming at you that the Western price is still wrong. You heard me correctly. Even at $100, the Western price is wrong. It is still too low. The real price, the price set by physical buyers who need the metal for industrial production, is $111.50, and the gap shows no signs of closing. This is what a rupture looks like. The old pricing mechanisms are breaking down. The paper markets are losing control. The physical markets are setting the true value, and the metal is flowing from where it is cheap to where it is properly valued. Now let me talk about JP Morgan, because this is where the story gets explosive. For decades, JP Morgan has been the dominant force in the silver market. They are the largest custodian of silver in the Western world. They hold more metal in their vaults than any other institution. They have been accused repeatedly of manipulating the price through massive short positions and spoofing trades. In 2020, JP Morgan paid $920 million to settle charges that they manipulated precious metals markets for years. $920 million. The largest settlement in the history of commodities market manipulation. But that was just a fine. That was just the cost of doing business. The manipulation continued. The short positions remained. The price suppression persisted. Because when you are the largest bank in America, when you are too big to fail, when you have the implicit backing of the Federal Reserve, a $900 million fine is pocket change. Until today. Today, President Trump filed a lawsuit in Miami-Dade County seeking $5 billion in damages from JP Morgan Chase. The allegation is that JP Morgan debanked Trump in 2021 following the January 6th events. They closed his accounts. They terminated his banking relationship. They cut him off from the financial system. Now, I know what some of you are thinking. This is politics. This is revenge. This has nothing to do with silver. But I want you to think deeper. I want you to connect the dots. JP Morgan is the silver fortress. They are the institution that has been keeping the price suppressed. They are the custodian of the largest silver hoard in the Western world. For years, the assumption was that if things got tight, JP Morgan would always have the metal to lease into the market. They were the backstop. They were the final defense. And now the President of the United States is attacking them with a $5 billion lawsuit. The political cover they enjoyed is gone. The assumption of invincibility is shattered. The fortress is under siege from the most powerful office in the world. Look at what has happened to their stock. JP Morgan shares have fallen for the 8th time in 12 sessions. They are down more than 10% from their January peak. While gold and silver are making all-time highs, the bank that has been suppressing those prices is bleeding. The market is telling you who is winning and who is losing. This is the rupture that Mark Carney warned about. The old alliances are breaking. The old protections are failing. The institutions that controlled the system are being challenged in ways that were unthinkable just a few years ago. And here is what makes this even more significant. Trump's Board of Peace, his new international coalition, now has 35 member nations. Argentina, Israel, Turkey, Saudi Arabia, the UAE. But notably absent from this list are any G7 partners. The traditional Western alliance is fracturing. The dollar-based system is being challenged from within and without. When Trump says his Board of Peace can do pretty much whatever we want to do, he is signaling a new era of American unilateralism, an era where the old rules do not apply, an era where banks that cross him face billion-dollar consequences, an era where the financial infrastructure that has been used to control global commerce is being weaponized in new and unpredictable ways. This is why gold is at $4,988. This is why silver is at $100. This is why central banks around the world are buying gold at record pace and quietly accumulating silver. They see the rupture coming. They are positioning for a world where the dollar is no longer the unquestioned reserve currency. They are preparing for chaos. Let me give you more context on the gold price, because the gold move is just as significant as silver. Gold touched $4,988 per ounce today. That is within $12 of $5,000, within a fraction of a percent of the next major psychological milestone. The weekly gain was 7.1%. That is the sharpest rise since March 2020, when the UK went into lockdown. Think about what was happening in March 2020. The world was shutting down, airlines were grounded, borders were closed, the global economy was collapsing. That was the last time gold moved this fast. And now we are seeing the same velocity of price movement in a very different environment. This is not pandemic panic, this is structural repositioning. The world is losing faith in the dollar. The world is losing faith in paper promises. The world is returning to the assets that have stored value for 5,000 years. The Chinese understand this better than anyone. Gold prices in China set their 7th new all-time high in just 10 sessions today. They have risen 14.1% since the start of 2026. Chinese investors are being told by analysts on platforms like Gold, won't CN to not be afraid of new record highs when buying gold. Just go long. That is the advice circulating in the largest gold-consuming nation on earth. But there are also warnings. Other Chinese analysts are noting that gold prices are rising despite negative data and negative news. They are warning that after a parabolic surge, there is often a mean reversion. Historical experience, they say, tells us to be vigilant. This is the duality of the current moment. On one hand, the fundamentals have never been stronger for precious metals. On the other hand, the speed of the move invites volatility. The path higher will not be a straight line. There will be pullbacks. There will be shakeouts. The banks will not give up without a fight. But the direction is clear, and the $100 silver print today is confirmation that the trend is intact. Now let me talk about what is happening in the physical market, because the physical reality is even more bullish than the price action suggests. Philip Newman, a director at Metals Focus, said today that silver should continue to benefit from many of the same forces supporting gold investment demand. But he added something critical. He said additional support will come from ongoing tariff concerns and still low physical liquidity in the London market. Still low physical liquidity. And let those words sink in. The London market is the global hub for precious metals trading. It is where the benchmark prices are set. It is where the physical metal is supposed to flow. And the liquidity is still low. The metal is still scarce. The shortage that has been driving this rally for months is not resolved. The articles I have been analyzing confirm this. They note that silver has surged more than 200% in the past year, driven by ongoing challenges in scaling up refining of the metal and a persistent supply shortage in the market. Persistent. That word is key. This is not a temporary dislocation. This is a structural deficit that cannot be fixed quickly. You cannot build new mines overnight. You cannot scale up refining capacity in weeks or months. The silver that was supposed to be available has been consumed. The vaults that were supposed to be full have been drained. The paper contracts that were supposed to be backed by metal are exposed as promises without substance. This is why the Shanghai premium exists. This is why $111.50 in China does not converge to $100 in New York. There is not enough metal to arbitrage away the difference. The physical market has decoupled from the paper market, and the physical market is winning. Tai Wong, an independent metals trader, noted that traders pushed steadily for and achieved the milestone $100 print. But he added a caveat. Investors will wait to see if it can sustain through the close, or will there be profit-taking from recent speculators. This is the tension of the moment. The milestone has been achieved, but the fight is not over. The banks will try to push the price back below 100. They will try to paint the close. They will try to create doubt. They want you to think that 100 was the top. They want you to sell. Do not let them shake you. The $111.50 Shanghai price is your anchor. As long as Shanghai trades at a premium, the Western price must rise to meet it. The arbitrage pressure is unrelenting. The physical flow is one direction, west to east. The metal is leaving. Let me give you the platinum and palladium numbers because the entire precious metals complex is moving together. Platinum hit a record high of $2,749 per ounce today. It closed at $2,735, up 4% on the session. HSBC noted that platinum is attracting investor demand as a cheaper alternative to gold. When gold is at $5,000, investors look for value elsewhere in the precious metals space. Platinum is benefiting from this rotation, but there is more to the platinum story. HSBC expects a structural deficit in the platinum market to widen to 1.2 million ounces this year. Structural deficit. There is that word again. The same dynamic driving silver is driving platinum. Demand exceeds supply. And there is no quick fix. Palladium jumped 4.3% to $2,002 per ounce. This is the highest price since late 2022, when the metal retreated from sudden highs above $3,000 following Russia's invasion of Ukraine. Palladium is critical for catalytic converters and gasoline vehicles. The supply is concentrated in Russia and South Africa. Geopolitical risk is baked into every ounce. The entire precious metals complex is screaming the same message. Tangible assets are being repriced. Paper promises are losing credibility. The world is waking up to the reality that physical scarcity matters. Now, I want to talk about what comes next because the next few weeks and months are going to be critical. The Federal Reserve meets on January 27th and 28th. Markets expect the Fed to hold rates steady at this meeting, but they are pricing in 2 more rate cuts in the second half of 2026. Lower rates are bullish for precious metals. Gold and silver are non-yielding assets. When interest rates fall, the opportunity cost of holding metals falls. Money flows from bonds into bullion. But there is a deeper dynamic at play. The Fed's independence is being questioned. Trump has made no secret of his desire to influence monetary policy. The traditional separation between the White House and the central bank is eroding. If the Fed loses credibility, if it becomes seen as a political tool, then the dollar loses credibility. And when the dollar loses credibility, gold and silver are the only safe havens left. This is the backdrop against which $100 silver exists. It is not just about supply and demand for metal. It is about the entire structure of global finance. It is about trust, and trust is evaporating. The friction between the US and NATO over Greenland is another symptom of the rupture. Trump has demanded that Denmark give Greenland to the United States. He has threatened tariffs on the UK, Germany, and France for not complying. This is not normal diplomacy. This is economic warfare against traditional allies. When Mark Carney says that great powers are using economic integration as weapons, this is what he means. The system that was designed to promote cooperation is being repurposed for coercion. The rules that were supposed to apply to everyone are being selectively enforced. The institutions that were supposed to be neutral are being captured. In this environment, gold and silver are not just investments, they are insurance. They are protection against a world that is becoming more chaotic and less predictable. They are assets that cannot be frozen, cannot be sanctioned, cannot be debanked. Remember what JP Morgan did to Trump in 2021. They cut him off. They closed his accounts. They denied him access to the financial system. If they can do that to a former president, they can do it to anyone. The only assets that are truly yours are the ones you hold in your own hands. Physical gold, physical silver, not paper promises, not digital entries in a bank database. This is why the smart money is accumulating. This is why central banks are buying. This is why Shanghai pays a premium. The people who understand the game are securing the metal. Let me take a moment to speak to this community. If you are watching MRAG Asian Guy, you are part of a group that saw this coming. You did not listen to the mainstream voices saying silver would never hit 100. You did not sell when they tried to shake you out at 80 or 90. You held, you understood, and today you are being rewarded. This is the only channel providing this level of analysis. We are only on YouTube. We do not have a Telegram group. We do not have a WhatsApp with paid signals. We do not sell courses. There are copycat channels stealing our content. They do not do the research. They do not connect the dots. They copy and paste and hope you do not notice. If this analysis matters to you, I need your help. Go to the comments right now and type 100 Club. Let me know that you were here when silver broke triple digits. Share this video with someone who needs to see the truth. Subscribe and hit the notification bell so you never miss an update. We are making history together. I need this community strong and informed. Now back to the analysis. Let me tell you where I think we go from here. $100 is not the end. It is the beginning. It is the doorway to the next phase of this bull market. The psychology has shifted. The narrative has changed. Silver is no longer a cheap industrial metal. It is a precious monetary asset that just joined the triple-digit club. When silver was at $90, people hesitated. They thought it was expensive. They waited for a pullback. But $100 changes perception. It validates the thesis. It brings in new buyers who are waiting for confirmation. The higher price creates more demand, not less. This is the Veblen good effect that we discussed in previous videos. Silver is becoming desirable because it is valuable. The Shanghai premium tells us that 111.50 is the near-term target. That is where physical reality prices the metal. The Western paper market must converge toward that price. Every day the gap exists, metal flows eastward. Every day, the Western vaults get lighter. The arbitrage vacuum is relentless. Beyond 111, the next targets are psychological. 125, 150, 200. These numbers may sound extreme if you are anchored to the old paradigm. But the old paradigm is dead. The rupture has begun. The forces driving this move are not temporary. Industrial demand continues to grow. Solar panels, electronics, electric vehicles, medical devices, every technology that defines the modern world requires silver, and there is no substitute. Investment demand is exploding. The 200% gain in the past year is attracting attention. Money managers who ignored precious metals are being forced to reconsider. Portfolio allocators who had zero exposure are scrambling to add positions. Central bank buying is accelerating. The move away from the dollar is not a theory. It is happening in real time. China, Russia, India, Turkey, and dozens of other nations are diversifying their reserves into gold. Silver is the next logical step. Supply is constrained. The challenges in scaling up refining are not temporary. The persistent supply shortage is structural. New mines take years to develop. New refining capacity takes years to build. The deficit cannot be closed quickly. All of these forces are pushing in the same direction, higher. And now add to this the political dimension. The President of the United States is at war with the bank that has been suppressing silver for decades. JP Morgan is bleeding. Their stock is down. Their credibility is damaged. Their political protection is gone. The fortress that was supposed to be impenetrable is under attack from the highest office in the land. I'm not saying that Trump filed this lawsuit to help silver investors. I'm saying that the lawsuit is a symptom of the larger rupture. The old alliances are breaking. The old institutions are being challenged. The old rules do not apply anymore. In this environment, silver at $100 is not expensive. It is cheap. It is a bargain compared to what is coming. Let me give you my framework for thinking about the next phase. Phase 1 was the breakout from $20 to $50. That happened over 2024 and early 2025. It was driven by the initial recognition of the supply deficit and the beginning of industrial demand acceleration. Phase 2 was the run from 50 to 100. That happened over 2025 and into 2026. It was driven by the physical liquidity crisis in London, the Shanghai premium emergence, and the acceleration of investment demand. Phase 3 is what begins now, the run from 100 to 200 and beyond. This phase will be driven by the full repricing of silver as a monetary metal. It will be driven by the complete loss of faith in paper currencies. It will be driven by the rupture that Mark Carney described. We are at the beginning of Phase 3. The psychology has shifted. The milestones have been achieved. The confirmation is in. Now, let me address the risks, because I believe in giving you the complete picture. The Chinese analysts warning about mean reversion after parabolic surges are not wrong. History does show that violent moves are often followed by corrections. Silver could pull back to 90 or 85 and still be in a bull market. Volatility is the price of admission for holding a volatile asset. The banks have not surrendered. They are wounded but not dead. JP Morgan still holds massive amounts of silver. They still have the ability to sell into rallies. They will fight for survival. Expect smashes. Expect volatility. Expect headlines designed to scare you into selling. The physical market can tighten further before price fully adjusts. The Shanghai premium could widen before it narrows. There may be periods where delivery delays and rationing affect your ability to acquire metal. Plan accordingly. Buy now while you still can. But these risks are manageable. They are known. They are the same risks that existed at $50 and $70 and $90. The investors who managed those risks and held through the volatility are now sitting on generational gains. Here is my message to you as we close this historic analysis. January 23rd, 2026 is the day silver broke $100. It is the day gold touched 4,988. It is the day Trump sued JP Morgan for $5 billion. It is the day the rupture became visible to everyone. You are not late, you are early. $100 is the beginning, not the end. The forces driving this move are structural and accelerating. The old system is breaking down. The new system is being built on foundations of physical reality, tangible assets, and restored monetary sanity. The Shanghai premium of $11 is your confirmation. The vault drains are your evidence. The JP Morgan lawsuit is your signal that the political winds have shifted. Hold your mettle. Ignore the noise. Watch the Shanghai price. Understand that every shakeout is an opportunity to add. The weak hands will sell, the strong hands will accumulate, and when this is over, the strong hands will own the wealth. Thank you for being part of the MRAG Asian Guy community. Thank you for watching to the end. Thank you for being here on the day silver made history. Subscribe, share, hit the bell. I will see you in the next analysis. We just watched silver break $100. We just watched gold kiss 5,000. We just watched the president sue the bank that manipulated these markets for decades. The rupture is here. The old world is ending. The new world is being born. Stay safe. Stay stacking. And remember, $100 was never the ceiling. It was always the floor. This is Mr. AG Asian Guy, signing off.